And today we're going off in a slightly different direction, albeit with some connected themes. And we're talking about something a bit more topical, which is company size limits, company size thresholds, something that the majority of businesses probably won't understand too much or are considered to be particularly important. But for a certain size and type of business, it can result in some quite significant changes, differences, and certainly the way that you engage with your accountant and or auditor, can be changed significantly. So to start us off, let's talk about what the changes actually are, what we're seeing coming in.
Yeah, so the main thing, I guess, that I wanted to spend a bit of time talking about today is, so it was as of April this year, the UK government redefined what is considered to be a small company. Okay, so there are other changes that came in around the same time, but that's the sort of main area that I wanted to spend a bit of time talking about today. And the last time that changed, the last time those thresholds changed was in 2016. Mm-hmm. And that was based on legislation from 2013. So this change has been in a long time coming. And if you think about what inflation has done over that period of time, and this isn't off the top of my head, I have done some research, a pound in 2013 is worth £1.44 today. So quite a huge sort of jump. So, I think those changes are sort of long overdue. And previously, what the actual limits were was a company had to have turnover, a small company had to have turnover of 10.2 million or under. And that's going up now to 15 million. Right. So a good chunk there. Balance sheet total was 5.1 million, and that's going up to 7.5 million. And then the third threshold is around the number of employees, which was 50, and that does stay at 50. Okay. But you can see those turnover and balance sheet thresholds probably do jump around the same amount as inflation has changed over that period. And as you mentioned, that's relevant for how companies engage with their accountants, but also super relevant for audit as well, because the audit thresholds and requirement for audit sort of follow those company size limits as well. Okay, perfect. So why these changes? Is it just that inflation ticks along, a company that didn't used to have an audit now does, and it's mainly just because they have grown with inflation, or are there other motivations as to why the government are doing this and doing this now? Yeah, I think that's a really positive offshoot for I think a lot of businesses, but I think for the government the focus was around simplification of compliance, and I think the party line was around sort of allowing those companies to focus on growth, to focus on innovation, specifically for those SMEs, so small and medium businesses. And with the raised thresholds, more companies will get the exemption from audit. There'll be less cash perhaps tied up in sort of compliance fees, and some of the more extensive and perhaps onerous reporting that comes with being a medium company. And I think there was a bit of a focus on trying to make the UK an attractive place to start and grow a business. That's probably a whole podcast in itself, one to talk to a tax person about. But there was sort of an underlying growth sort of focus from the government. So what we're talking about here is over-regulation, under-regulation. So from my perspective, if we sort of put audit to one side, the financial reporting regulations, a small company has significant exemptions as to what financial information needs to be placed on public record at Companies House predominantly, and I'm sure lots of people listening and watching along will know that the profit and loss account, for example, doesn't have to be published at Companies House at the moment as a small company. And I know there are other considerations in the thinking for the business secretary at the moment as to whether that changes or not. But fundamentally, those exemptions that small companies get from a financial reporting perspective are pretty significant when you compare them to a medium-sized company, and the information, not just the profit and loss account, but lots more as well, isn't there? Yeah, definitely. Particularly around things like the strategic report. There's so much information that goes into a strategic report that's published for a non-small company around financial KPIs, around sort of risk. And there's a lot of time that's invested from a company management, from the directors, in writing that report, which it does, it's sort of an administrative burden. That itself isn't a document which assists those businesses in running their operations day to day. And in owner-managed businesses, that information is often not something that they want to put in the public domain. So as auditors, we have a bit of a sort of, I don't want to say battle, but, there's a bit of to and fro on sort of trying to be pragmatic about what is appropriate for a business to put out there and what is compliant. So whilst, as an auditor, there's a downside in terms of the volume of businesses that are going to be wanting and needing an audit, I think it's good news for companies who will now sort of fall out of the regime.
Yeah, because ultimately, I think if you think about this, the small companies regime, FRS 102(1)A exemptions, for those of you that are technically minded, kicks in for companies turning over 632,000 or so when the micro-entity provisions disappear. And now we're taking this all the way up to 15 million pounds of turnover. So the difference is in every single sense of a company turning over 650,000 and turning just under 15 million are vast, aren't they? And so it must be difficult, shall we say, for the government or those in power to kind of know at what level to pitch this. Because for many of us, a company turning over 12, 13, 14 million, you expect that there is some information available on public record about performance. But at the end of the day, their motivations when it comes to where to put that level, as you say, is it mainly driven by trying to simplify those obligations for businesses and make being in business a little bit easier? Yeah,
I mean, when you read the sort of papers around it, the motivation that is sort of cited constantly, whether you look at sort of news articles, observational pieces, the actual introduction to the legislation itself is around simplification. It's around decreasing the administrative burden and allowing businesses to focus on what is important, and spending their money on innovation, spending their money on growth, spending their money on employment, and all of those things, which the government will take their cut off through corporation tax, through employment taxes, but it is attempting to encourage businesses to refocus on not writing reports, but actually investing in enterprise in the UK. And to be honest with you, it's been a long time coming, So you can see from those inflationary figures, £1 to £1.44, change needed to happen. And, there's micro entity changes as well. So that 632 sort of becomes 1 million. So things shift up sort of commensurately. But yeah, I mean, it's taken a while to get here.
You talk about sort of the delay between when the last increase came in and sort of previously to that, I think there was a big jump from 1 million up to 5 and a bit, and then to 6 and a bit, and then up to 10. So they have been before that maybe slightly more regular, but ultimately, has the current government taken this on, first job, win an election, let's raise the company thresholds, or was this something that was being planned and mooted by a previous government? They've just taken it on. How do these kind of things work?
Yeah, this has been on the table for a while. Sort of as a profession, we knew that this is something that was consulted on for a little while back. Specifically, reducing red tape for SMEs, I think, was a sort of strap line that was followed with that. So yeah, that's not, whilst the current government, seeing it through, this has been around for a while, and as a profession, we knew that it was coming. The magnitude and the pace of the change, actually. So when the legislation was published through to actually it being enforced, so 6th of April, sort of 25, that it was quite rapid. So I think whilst we knew that the change was coming, the surprising bit was that the magnitude actually matched the inflationary growth, and that it was implemented very quickly, because we all know that things from the government don't tend to move that quickly.
Can take a while.
Yeah, absolutely.
If I may, can I just turn you on to your specialised subject of audit? So, put simply, small companies don't need an audit and medium companies do. So this isn't just about financial disclosure, it's about audit exemption as well. I know we touched on this in a previous podcast, but I did just want to return to it very briefly and just talk about what preparations companies need to make if they are now falling out of audit. Someone's turning over 14 million, whoopee-doo, we don't need an audit anymore.
Exactly.
What should these guys be thinking about?
Yeah, so you're absolutely right. In the main, a small company, there's always, I want to caveat that there's things to talk to your accountant and auditor about if you think you might fall out of the regime. But in the main, small companies are exempted from audit, and the stats sort of show that around 14,000 companies are now going to be exempted from audit that previously would have had one. So at first, directors are going to say exactly what yippee, we haven't got to have an audit. That's going to save us, 10, 20, 30,000 pounds. Superb. And on top of that, as we mentioned, not only does the need for audit fall away, some of the reporting falls away, and that's great. But the catch is that audit provides really good stakeholder information. It provides financial assurance, independent financial assurance. If companies have got borrowing, if companies have got external stakeholders, audit is a really important part of that relationship. Coming away, having previously been audited and then not being audited could raise some questions around transparency, around financial oversight. And as I mentioned, some of the stakeholders, lenders, sort of external shareholders, debt holders, those kind of things, they do rely on the audit as a really important sort of component of their relationship with the company and assessment of companies' health. So, I mentioned that there are caveats because some small companies won't be eligible to exempt themselves from audit, but it is certainly worth, at the very first point, having a conversation with your accountants and auditors over whether A, you are eligible for the exemption, and then B, thinking about whether there are your external stakeholders may have a view on sort of just broad brush taking the exemption.
Yeah. So get organised, speak to the right people early. Yeah, indeed. So in your opinion, is this a really big deal in your world, or is this just it was always going to happen at a certain point in time, or will probably happen again sometime? Yeah,
I mean, I think it was always going to happen. At first glance, you sort of think, oh, well, we're going to lose a load of clients. I think probably what the best we can hope for is that companies are educated well and they engage with their accountants and auditors and think about whether exemption from audit is the right thing for them. That loss of financial... I'm obviously biased because I think that audits are really valuable and really important. That's what I do.
Yeah.
I like to think that you get more from an audit than just a tick in the box assigned an audit report, and that actually businesses who engage with their auditors will get more value add from that process. So if you're with the right auditor, hopefully that decision may be a slightly harder one. There's a time saving associated with not having an audit. It can be a bit of a burden in itself. But yeah, are there longer term sort of risks perhaps associated with being unaudited, particularly if you're a business who is growing? You might just be outside of the new audit thresholds, but if you're planning for growth and you anticipate that in a year or two you're going to be back in the audit regime, does it make sense to dip out of it for a couple of years and then fall back into it? So, I don't think that there's a one size fits all.
No.
Do I think that the regime is going to change again? I think we're probably going to be waiting another 10 to 15 years for another big change. So it's certainly worth taking this one seriously and looking at it.
Because I guess, Abi, as I see audits, the approach seems to be that the auditor has that materiality level, works towards that. So every significant figure, there's work undertaken to a certain level to tick that materiality box. So you kind of get that broad brush review of everything, and you get that tick that everything is okay. Not a technical term, I'm sure you'll correct me on that one. But doesn't necessarily delve down into the precise detail of certain areas. So is there, for those companies not needing an audit anymore, a bit more flexibility to maybe continue with some assurance services in a different way? Yeah,
definitely. So, and that exists already. So companies can opt for a limited assurance review if they're unaudited. I suspect they wouldn't go for it if they were being audited as well. But that is an opportunity for a business to, if there's a particular area that stakeholders have a keener interest in, if there's an area that's riskier, but the entity doesn't want to subject itself to a full audit, full voluntary audit, you can undertake a limited assurance review as an accountant auditor. And that we can scope that work out very specifically with management, with the board, with directors, to cover the areas that are relevant, the areas that they're concerned about. So we'd sit down, it's very collaborative, we'd scope out a really detailed sort of programme of work. This is what we're going to look at. And I've done this, a good example I think is around, I worked with an architectural firm. they didn't need an audit, but the area that they were specifically interested in, the area of risk, is around WIP and revenue recognition. So we detailed out, I don't know, 12, 13 very specific tests around their budgeting process, about how profit was recognised, about agreeing back to contracts. And then it's a very factual findings that are reported. We don't provide an opinion, but we say we tested 40 contracts. These are our findings. This might indicate X, Y, and Z, which actually I think could be infinitely more useful to a company outside of the audit regime, where they think, actually, we would like the comfort of a bit of external oversight. And it may be, perhaps we'll see going forward, that lenders, external stakeholders, they perhaps, for an unaudited entity, might guide organisations down that route, perhaps, if there's a particular area, covenant reviews, those kind of things, that perhaps are a bit more useful and less time and cost intensive.
Yeah, so significant areas that really do impact the financial statements, but not just that, internal control and processes. They can direct us on a limited basis to really interrogate those areas that are super important to the business, and not look at those areas that potentially feel like a bit of a box tick.
Exactly.
Feels like a win really for those dropping out of audit, and even for companies that don't need them, to have a think about limited assurance projects. I think is something that, for me, obviously I've come across these in the past, but quite rarely. Is this an area that is underused in the UK, do you think, and should get a bit more attention?
Definitely. I mean, that would be particularly now where we're looking at this big change in the thresholds, I just think it's a really good time to sort of pivot and take a look at that. I absolutely agree. They are hugely underused. I've not seen vast numbers of them in my time in audit, but I think that they're hugely useful because, like you say, you can really tailor them to focus. I think perhaps the issue has been that the audit thresholds have been not so low, but low enough that actually the businesses below the thresholds previously just haven't, they've not been sort of perhaps large or sophisticated enough to think about those things. Whereas now, maybe this is our opportunity. And I think actually, as an auditor, it's partially my responsibility and the other audit RIs and managers and things to sort of initiate those discussions with our clients that are falling out of the regime, and then educate the non-audit sort of staff that that's an option, that's something that we could do for them.
Well, certainly my observation in that scenario would be that the majority of smaller companies are still owner-managed businesses. And so the managing director who founded that company many years ago and still oversees absolutely everything feels that the processes are fit for purpose because they designed them and they continue to oversee them. And it's those larger organisations where the stakeholders, the owners, are separate from the day-to-day management, where potentially this independent oversight can be really useful. So, potentially what we will see is some of those larger organisations where ownership and management are split drop out of audit and then take advantage of this. Yeah,
definitely. I think, you're not going to, exactly as you say, if your owner is in the business day to day, then I do understand that they're going to continue to see little value to an audit. And I'm not going to advocate, I'm not going to try and convince those people that an audit or a limited assurance engagement is what they should be doing. Because that's not what we're about. But I think you're absolutely right. Where there are external stakeholders that are not involved in the business day to day, then I think, we could be having some more sensible conversations perhaps around that.
But certainly, from my perspective, just sort of taking it off, in a personal direction, I think a lot of the businesses I see where the founders are thinking about retirement, thinking about taking a step back, maybe have a good management structure beneath them that may become the board of directors of the future, to take a bit of a step away and have us in to review certain key areas independently as a stepping stone to semi-retirement and succession and such like there that probably could be quite useful. So, those owner-managed businesses out there, I think they should certainly consider this as part of succession planning, that gradual process that they should be talking to their accountants about all the time.
I very much agree.
Thought you might. So finally, Abi, I guess the question I just wanted to end with was from a personal perspective, if you could change these rules, tweak them in any way, where do you think they should sit, and how does it compare to maybe some other types of organisations that have to have assurance reviews and audits?
I mean, I think it'll come as no surprise that I'll say I think it would be good if there was a middle ground. perhaps mandatory limited assurance. There might be like a middle bracket where that sort of limited assurance had to happen. That could be perhaps sector specific. So if the government are identifying perhaps sectors of higher risk, I don't know whether that's, perhaps tech or something, something a bit more up and coming, so that there's a bit of a risk profile, something specific there with thresholds and things, where the regime could be sort of mutually beneficial to company and the regulators. I'd also love better education on voluntary audits and limited assurance, because I think I do think that there's just a real gap in knowledge of what that regime looks like and how it can be used, of the cost saving versus the sort of strategic benefit of those things. I guess, like I said, that's sort of our job to help educate clients there. And then in relation to sort of other kinds of organisations, one of the things that I do find really interesting is we're talking about 14,000 companies that are now going to be sort of exempted from the audit regime, and charities. UK charities play by a totally different set of rules. So UK charity law at the moment says that you have to have an audit if your income exceeds £1 million, £1 million in most cases. And again, there's some slight bits around the side there. And that hasn't budged for a while. There is consultation out on that. But that consultation only looks to be thinking about increasing those limits to sort of 1.2 to 1.5. So, that's quite a long way off. And I do sort of understand that, with charities, there's an element of public trust, public money. So there is an argument for them to be considered at a lower level. But when you think that gap is vast, isn't it?
Yeah, I guess that ultimately charities require more public oversight, and that's the reason why that threshold is lower. But that disparity between 1 million and now 15 million, that does feel significant. I guess that's just commercial versus the not-for-profit sector. And we hear a lot about continued regulation for those organisations, and lots of other problems being experienced by the charity sector. You must be seeing as well, including, they're not immune from national insurance rises, are they? So challenging time for the not-for-profit sector, is it, at the moment?
Big time. Yeah. I mean, that's been going on for some time. Less funding available, more costs. It's a constant battle, and now, no change to potential audit costs. So not seeing the same benefits as the company sector, but yeah, totally. The point on sort of public trust and public interest in those is definitely a relevant one. But yeah, we'll watch this space and see if that consultation comes to anything. We'll still be with a regime that's sort of 10% of the companies one, but there we are.
Fantastic. Well, look, if anybody wants to get in touch with Abi, you work mainly from our Bury St Edmunds office. Yep. We're here in Norwich today. So, Abi can assist with any assurance inquiries, audits, anything like that. Please do get in touch. You'll deal directly with you and your team.
Yep, absolutely.
Anything of interest, please get on the Lovell Blake website and make contact. But for the time being, until next time, thank you again, Abi, for joining me, and thanks for tuning in.